Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Thursday, January 22nd. Well, much of the news for the grain and the oilseeds remains somewhat status quo. We are a bit firmer in the overnight session. We have the wheat market up around 3 to 4 cents, the corn market up a penny, the bean market up around 3 to 4 cents, the meal market up $3. The only market in the red is the soybean oil, that's down around 5 points. Like I said, most of the grain and the oilseed news is status quo, but there is one thing that the trade is awaiting, something we have to do with the outside markets. We're waiting to see what the European central banks might do to try and revive their economy through quantitative easing. This should have some effect on the U.S. dollar and what it means towards commodities. Once again, a strong U.S. dollar is kind of a little bit negative to U.S. commodities in the sense that it makes our grain and oilseeds more expensive to importing countries. And secondly, down the road, if we have a strong dollar, foreign countries or foreign farmers, that is more willing to go and plant more grain and or oilseeds. And with us right now abundant in that department, that really doesn't bode well as far as trying to take down our world supplies of the grains and oilseeds going forward. So once again, we'll see how that pans on out. It may have a little bit of immediate direction to the marketplace, but once again, that's something more short term. We're still concentrating also on the South American weather, which remains quite conducive. No problems there. Cross prospects remain quite bright, non-bullish to our marketplace. We're going to have an ethanol report out later on this morning. Once again, keeping an eye on corn usage and more importantly, trying to see if we're not stock building those ethanol supplies, which is somewhat depressive towards the corn market in general. Weekly sales, which are delayed from Monday, will be on out tomorrow. Once again, how competitive are we against those world foreign supplies, which are either status quo at our price and or cheaper, which once again is a non-bullish environment for our place going forward. And then we still have the commitment of trade report, which will come on out tomorrow, where the trade is either net even or net long across the marketplace, which also, under this environment, doesn't really see where we're going to have money flow come in on the long side. If anything, in this non-bullish environment, perhaps continuing to keep the onus on the bulls to perhaps liquidate their trade to at least to a point where we can get prices to be competitive to draw down our supplies that are quite bountiful at this time. So once again, sell on rally type of marketplace. We'll see what the European central banks want to go and do. These are my opinions, not that of ADM or ADMIS. Thank you.